It's pretty wild to think about how a terrifyingly efficient economic juggernaut can suddenly turn into a global cautionary tale of stagnation. Today, we're diving deep into Japan's dizzying highs, its crushing lows, and this incredibly complex web of demographic and financial challenges they're facing right now. But more importantly, we're going to look at what Japan's story means for the future of the entire global economy. Because what's happening there, it might just be coming for the rest of us. All right, let's kick things off with a pretty mind-blowing paradox. Back in 1994, Japan's gross domestic product was $4.9 trillion. So what do you think it is today, 3 whole decades later? It's exactly $4.9 trillion. Seriously, that represents zero real growth over a 30-year period. In a modern global financial system that is literally built on the assumption that economies will expand forever, this is a staggering reality. How does a massive economy just stop? To truly grasp how wild that is, we really have to contrast the mindset of the past with the reality of today. Right after World War II, Japan went through an absolute economic miracle, boasting an explosive 10% annual growth rate. They were the world's go-to manufacturer and eventually this unstoppable high-tech powerhouse. But jump to today, and that roaring engine has sputtered to an estimated 0.3 to 0.4% growth rate for 2024. That's practically standing still. Because of this, Japan recently suffered a massive psychological blow, actually slipping behind Germany to become only the fourth largest economy in the world. Chapter 1: The Bubble and the Burst. To see exactly where the engine stalled out, we've got to trace this macroeconomic journey back to the late 1980s. This was when Japan experienced an asset price bubble of truly epic proportions. Just to put this into perspective, at its peak, the real estate market in Tokyo was so inflated that the grounds of the Tokyo Imperial Palace were supposedly worth more than all the real estate in the entire state of California combined. California! It's absolute insanity. But, as we all know, bubbles burst. The 1990s brought a devastating crash which led to some really desperate measures like quantitative easing in the 2000s, bringing us right up to their current sluggish reality. So you're probably wondering, how did things get so out of hand? Well, economist Paul Krugman summed it up perfectly. Japan's banks basically threw money at anyone who asked. Driven by really aggressive lending quotas from the Bank of Japan, a policy known as window guidance, banks were lending with almost zero regard for borrower quality. And this created a colossal, grotesque inflation of land and stock prices. When the central bank finally got spooked and raised interest rates in 1990 to try and cool things down, well, the bubble popped hard. Asset prices completely plummeted by 60%. Chapter 2: 3 Decades of Stagnation. Following that spectacular crash, Japan entered an era with a very dark, very specific moniker: the Lost Decades. Originally, people just called it the Lost Decade of the 90s, but then they had to expand it to 20 and then 30 years. The crucial takeaway here is that Japan fell into a deflationary spiral. Now, deflation sounds great to us as consumers, right? Things get cheaper. But for an entire economy, it's a complete nightmare. If prices are constantly falling, your cash actually becomes more valuable over time. So consumers just start hoarding their money. They think, hey, why buy a car today when it's going to be cheaper next year? And this behavior totally stalled the economic engine, creating what's called a liquidity trap, where even 0% interest rates couldn't force people to go out and spend. Chapter 3: The Demographic Time Bomb. Now, this economic stagnation feeds directly into an entirely different kind of crisis. We're talking about falling birth rates and an aging population. And this is no longer just a social or economic issue. According to the National Institute for Defense Studies, these demographics are now officially considered a severe national security threat. Think about it. A shrinking pool of young people severely limits military recruiting for their self-defense forces and just weakens the nation's overall resilience against global crises. Japan is facing a demographic squeeze unlike anything we've seen. Get this, their total fertility rate actually fell below replacement levels way back in 1973, right after the oil crisis. Today, Japan is literally the oldest country in the world. So you've got this rapidly shrinking working-age population that is being heavily taxed to support a massive, constantly expanding population of citizens aged 65 and older. It's simple math. You have fewer people paying into the system and way more people drawing from it. Chapter 4: The Mountain of Debt. Caring for that massive aging population, combined with decades of government stimulus just trying to jumpstart the economy, requires a staggering amount of capital. Today, Japan carries the absolute highest debt burden of any developed economy on Earth, bar none. Their government debt to GDP ratio sits at over 230%. In absolute terms, we are talking about a debt of over 1,300 trillion yen. It's so big that roughly a quarter of their entire annual national budget goes exclusively toward just paying the interest on this existing debt. Because of this literal mountain of debt, the Bank of Japan is walking a completely impossible tightrope right now. Recently, inflation has actually returned to Japan, and the yen has become incredibly weak against the dollar. Normally, a central bank's playbook is to just raise interest rates to strengthen the currency and fight off that inflation, right? But if the Bank of Japan raises rates significantly, the cost to service that 1,300 trillion yen debt becomes mathematically unsustainable overnight. They are completely boxed in. Chapter 5. Deep Structural Economic Flaws. Beyond the terrifying math of demographics and debt, Japan's economic engine is suffering from some deep mechanical failures. For one, it's bogged down by what economists call zombie businesses. These are companies that aren't actually profitable but manage to barely survive solely because they have access to historically cheap debt. On top of that, you have this highly polarized labor market. To cut costs over the years, a ton of companies replaced full-time workers with temporary part-time staff. And these workers receive very little on-the-job training, which drastically slows down human capital accumulation. Another massive failure, and this is highlighted beautifully by the Research Institute of Economic Trade and Industry, is that Japan severely lagged behind in the information and communication technology, or ICT, revolution. The accumulation of ICT assets was just incredibly slow compared to other developed nations. They basically missed the boat on digitization, and that failure to innovate severely dragged down their total factor productivity, particularly within their absolutely massive service sector. You really have to contrast the 1980s with today to see the full impact of this. 30 years ago, Japanese electronics and automobiles were completely untouchable. I mean, of the world's top 50 companies by market capitalization in 1989, an incredible 32 of them were Japanese. Today, only Toyota remains on that list. Those former tech giants have been routinely outperformed on pricing and innovation by their foreign neighbors in China, Taiwan, and South Korea. Chapter 6. The Path to Revitalization. Okay, I know this sounds super grim, but let's shift gears because it is definitely not all doom and gloom. The Japanese government is highly aware of these existential threats, and they're executing some really aggressive strategies to rebuild their engine. To fight the labor shortage, they launched Womenomics, which actually successfully increased female workforce participation to a record 73.5%. They're also cautiously relaxing their traditionally strict immigration policies, managing to bring in over 1.8 million foreign workers to fill critical gaps. And finally, they are leaning heavily back into their technological roots. They've launched the Society 5.0 initiative to deeply integrate physical space with cyberspace and are investing massively in artificial intelligence. And here's the best part. We are already seeing incredible glimpses of how these tech investments could pay off. Recent research indicates that Japan's early integration of AI has already provided an estimated 0.5 to 0.6% boost to macroeconomic labor productivity in just the last year alone. If they can consistently combine productivity boosts like this with their structural reforms, there is a very legitimate path to escaping those lost decades once and for all. So I want to leave you with this final, truly provocative thought. Birth rates are dropping globally, right? In fact, 50% of countries worldwide now have sub-replacement fertility rates. On top of that, most developed nations are also accumulating their own massive mountains of debt. So when we look at Japan's stagnation, are we just looking at a cautionary tale of local economic mismanagement? Or is Japan simply the pioneer? Are they just giving us a preview of what every single advanced economy on Earth must eventually face when the era of infinite growth finally comes to an end?